Thank you. I welcome all our participants, dear students, on this practical training modules which we are organizing for the practical trainings to our article clerks because they are not getting opportunity on all the subjects. So ICI thought that we should start this practical training module. So every Sunday, 10:30 to 1 p.m. Please be online. You will get some topic of your interest, whatever you are doing in your office, or if you are not doing in your office, still we will get the session on. So considering the high time for tax audit, we are now taking session of tax audit. This is the last but one session. We will have the last session on 4th of September on tax audit. So being the session on tax audit, I thought I should invite two experts on the subject. On my right, we have CA Secretary, we call him CV Chitle sir. He is from Pune and presently chairman of Direct Tax Committee. And this year, Direct Tax Committee done every year they are doing something, but this year the great job which he has taken and completed. I must say he has taken the lead from the front, and we have tax audit guidance note released and available to our member and student. It is done almost after a gap of 8 years, I believe, to my memory. And 8 years is a longer period. We should not do it. Council was of the opinion that every year we must do it. But let's see how it will be taken care in the next time. So, Chitle sir, we have invited him to address all of you. We have also invited Pramod Jain ji. CA Pramod Jain is council member from Calcutta. Earlier, he served as a vice chairman to the Direct Tax Committee and so many other things. ASP is chairman now. So Pramodji having a vast area and most sought speaker on tax audit. Anybody want to organize program in the country on tax audit? First and foremost, he always think about the Pramod Jainji. Somehow I am not getting him to take the entire session, but somehow, but now I got him, and he is going to take the next session, which will be the last session on the tax audit, that is on 4th of September. He will also address today. So first I am requesting Pramod Jainji to address our students. And we have speaker Janice R. Farik, who is going to take the session. And Fenil Sir will supporting him as a moderator, and he will help him mainly during the question answer session. So all our students are aware. You can type your questions and it will directly go to the speaker, and we will definitely try to take the answer to this query, whatever you are raising. So thank you for joining all of you. Now I am requesting Pramod Jain sir to say a few words, motivate our students and guide our students. Thank you.
Thank you, Sushil sir. C. Sushil Kumar Goyalji, Chairman of the Student Skills Enrichment Board, the Board of Studies Operational, who is doing a fantastic job every Sunday. This practical training for the students, good thought process, and of course, students who are into different area may not be able to get the practice in another areas. Some may be doing into audit, some may be doing into taxation, some may be doing into, say, internal audit, but not all the fields. So these practical trainings are really helpful to all the students. So good job done by our chairman of the Board of Studies Operations, C.A. Chandrasekhar Chitle sir, our chairman of the Direct Tax Committee, who has done a wonderful job bringing out this much awaited guidance note. The pains which the board, the committee has taken under the leadership of Chitle sir is really unparalleled. And any student who wants to know more about income tax, more about tax audit, apart from these practical sessions, should go through that guidance. If I talk about the session which is there, which C.A. Janish Parikji would be taking, one or two very important points for the tax audit. First of all, if you really want to understand income tax as a whole, the only thing if you can go and do is to just go to these 44 clauses of 3CD, and whatever the provisions are mentioned there, go deep into that. If you are able to understand that provision and able to reply to that question. Now, simple example, some of the clauses says that, okay, the deductions allowable under section 80 ICE or 35 AD, if you are able to understand that section, your that provision whole would be clear. It is not about just clearing the exams. It is about when you practice later on, it will be very helpful. The only thing which I'll say in the beginning is that when you are just seeing that whether tax audit is required or not, just the session today important. Just go to this section 44 5 clauses. But the most important thing there is that when you do a tax audit, it is an audit of financial statements also. Please don't forget, it is not merely 44 clauses, it is audit of the financial statements, whether it is proprietorship or partnership. And in that case, please ensure that you comply with the accounting standards and the standards on auditing. So when you do a tax audit, it is not merely the income tax 44 clauses, but the compliance of accounting standards, as in case of proprietorship, partnership, LLPs, as issued by ICI, and the standards on auditing also. So that is foremost. Giving a true and fair view of the financial statement is the foremost thing in the tax audit, and then this whatever process. Have a great happy learning. Thank you very much, Chairman sir, for giving me the opportunity to share my.
Thank you, Pramod sir. And now I will request Shitla sir to speak few words as the chairman, direct tax committee, as his experience, because he organized good number of meetings in the country. He done outreach programs when he was preparing the this tax audit guidance norm, and he personally handled, the most important thing, he personally handled all this outreach program and reached out to the members and gathered their suggestions, their shortcomings, where they need the guidance. So over to Chitla sir, he has an experience of almost 40 years in profession. So almost the age of our speaker today. Over to Chitla sir.
Good morning and thank you, Chairman, Student Skill Enrichment Board, CA Sushil Kumar Goyal, my good friend and council colleague, CA Pramod Jain, the brilliant speaker, Janish Parekh, and also another brilliant faculty member who will be coordinating is Fenil Shah, and all of you, my student friends. It's indeed a pleasure to join this particular practical training session on tax audit. As you are aware that this is the era of specialization. One cannot say that I'm doing audit, I'm doing taxation, I'm doing management practice. Actually, the specialization gets you rich dividends. So you have to focus a particular area. Even in taxation nowadays, it is not just to say that, okay, I'm practicing in direct tax. People have started saying that, okay, I'm doing in personal taxation, I'm in litigation, I'm in transfer pricing. So that type of specialization has set in. And one who specializes gets better dividend of his all learning and training. But then, as you are aware, that specialization does not operate in vacuum. Before you specialize in particular field, about that particular arena, you need a 360-degree understanding. Maybe you are not expert. While you are doing tax planning, it is not necessary that you know only taxes, and GST and other taxes you completely ignore. So there should be understanding so that at least whatever solution you come across, you get it tested from the other perspectives. So those who are intending to do this tax practice, for them this session is no doubt commended. And those who are not intended to tax practice but want to do management practice, auditing, or any other field, just to tell them that in any enterprise, 30% minimum partnership is of the government. And any partner would like to pocket more and share less to the other one in legal sense. So if your tax bill increases, definitely the income at your disposal will reduce. So there has to be understanding about tax laws. And as Pramod has stated earlier, that if you read all those 44 clauses, And alongside reading of those clauses, if you also read the relevant sections and maybe commentary on those sections, there would be great understanding about the income tax law. That will certainly help you. These particular sessions are also concomitant with your objective of qualifying the final examination, because the questions in final examinations are more practical oriented. So when you go through these sessions, maybe the experts like Fenil and Jenish share the wisdom they have acquired through their practice, through their practical experience. So it will definitely bring out better knowledge, better experience to you without actually doing those audits. So from this perspective, I really compliment the Student Skill Enrichment Board, its chairman, Sushil Kumar Goyal, for organizing such lectures. Coming to tax audit guidance note, as you are aware that guidance notes are issued by the institute and they are generally considered as mandatory for compliance. Of course, if any person feels or any practitioner feels that there is some better way of doing the thing than that is mentioned in the guidance notes, he is allowed to do so. But in that case, he will have to place on record the note that as to why he has deviated from the mechanism or from the advice which was given in the guidance note. So guidance note carry great importance. Now this is the season that maybe in September everybody will be engaged in this tax audit, and tax audit is by and large carried out by article clerks and other assistants in the office, and therefore from their perspective understanding of this particular arena is very important. So please try to attend both this session as well as subsequent session. Before attending session, or maybe if today you are not read, after attending this session, please try to read the guidance note, which is freely available on website of direct tax committee. The guidance note makes you understand what is the expectation of a chartered accountant while conducting tax audit. It is also stated that the particulars which are furnished in Form 3CD, a draft of those particulars are to be supplied by the client. And for a chartered accountant, it is to accept those particulars and not blindly put them in Form 3CD, but examine them. And whatever he finds appropriate, it is his Form 3CD, he has to put it in Form 3CD. So all these practical aspects which are required understanding by students, maybe after qualifying, they will go the practice route or they may go the industry route. Anywhere they go, this particular training in tax audit would really come handy. If you are doing in practice, maybe you will be engaged in doing these tax audits. If you are in industry, you will also be responding to these provisions of tax audit. And in any case, for any enterprise, there is a tax outflow. And when you understand this tax provision thoroughly well, you can also try to reduce the tax burden and know what are the various legal provisions where we can legitimately reduce. And secondly, you also arrest exposure to any unpleasantries like interest, penalty, prosecution by guiding properly the assessee to come on the right path. So these twin type of objectives can also be accomplished by a student by undergoing this training. And as I stated earlier, for examination also, maybe if he's otherwise going to score 70 marks, by attending such sessions, his marks will go to 80. So with this thought process and with these wishes that all of you should score good marks in direct taxes, I comment this session for the students and for all of us. Of course, we also would be learning from the guidance of these two brilliant speakers. So we also look forward to attending this session. But we have council meeting, so maybe we will have to go. But maybe recorded version, I would request chairman to make available so that we also can understand what are the issues. And also, if you come across any difficulty, any issue, the direct tax committee is going to set up a panel of experts. So you escalate those queries to the direct tax committee, and we will try to address the solution for those issues. So, and these queries can come to dtc@icai.in. So with this, I comment once again this particular session for all the students. Thank you.
Thank you, Chitra sir, for guiding the students from your practical experience, which I can witness. And thank you for being here and sparing your valuable time. My dear student, you have must learn that we are having these sessions, recorded sessions available on our YouTube channel. that is ICI TV, I believe the channel name. And you can see all these sessions. Today is the 17th practical training module we have organized. So be there and keep on learning. Happy learning time to all of you. And I welcome Janice Arparik, today's speaker, CA Janice Arparik, and CA Fenil Shah. He is moderating the session with the Janice Parik. And over to you, Janice. I think we can commence the session right now. Thank you.
Thank you, sir.
Janish ji, just a minute. Let me just introduce Janish ji first to all the dignitaries present here, and also to the students who are attending this 17th live session. So friends, it gives me an immense pleasure to welcome you all to this 17th live session, and I expect that you all be the participants in all the upcoming live sessions. In absentia, the President sir, Vice President sir, greetings to them. The Chairman of Student Skill Enrichment Board, the person who has coined this whole particular concept for all the students, none other but Sushil Goyal ji. Also Vice Chairman Sridhar sir in absentia. The two very learned, experienced speakers whom we are lucky to have today in our session, CA Chitle sir, the Chairman of Direct Tax Committee, and also CA Pramod Jain sir. And friends, I can say that this session is a combination of the speakers who are learned and experienced and seniors like Chitle sir and Pramod sir, and also equally experienced and young and talented speaker for the day, CA Janish Parik ji from Ahmedabad. Friends, CA Janish Parik ji is practicing in the field of income tax in a practicing firm, and his main area of practice is income tax assessments and appeal. Apart from working in the field of taxation, he is also working in the area of project finance and giving advisory in the startup issues. He has authored many articles in various publications. He is a regular speaker in various conferences and student sessions, and is also actively playing a very pivotal role being a subcommittee member in various committees like Direct Tax, International Tax, RRC committee in the Ahmedabad branch of WRC of ICAI. And still, his profile goes long and long, but I think so that you will be much more introduced to the particular speaker rather than this profile by listening to him. Now, before I hand over the charge to Janish Parik ji, I would like to say you something to dear students that try to make the utmost benefit of this particular session by noting down all the points which our respected speaker says. One very important point is, which also Chairman sir told, that you can post your queries in the query box. But our request is not to hurry in posting your queries immediately the session starts, because almost your queries will be addressed by the speaker. And keep in mind the scope of the session. The scope of the session is mainly to discuss few sections like 44 AD and all, also stock market, and we would try to restrict our queries only up to clause 20. That is clause 1 to clause 20. Because clause 21 to 44 will be addressed in the next Sunday session. So would request not to post the queries of those clauses which are not the agenda of today's session. One another point to reiterate is that the session will be shared. It is already there live on the YouTube. I request you, the students, to help us, the Board of Studies, in order to make this session much more fruitful is, one, after this session, go and share the link of this session in all the students group of which you are a member of. And also, once you get the flyer, the poster of the next session, be the helping hands to Board of Studies and try to circulate this to all the students as possible, so that today you are lucky, in the next session along with you, let other students also take the benefit of that. And before I end up, today's session query you can post in the query box, and when you're working in your office, if you get any queries, as Chitle rightly said, post it to dtc@ici.in. So now, without wasting much of the time, let's start the session by one of the youngest speaker, CA Janish Parikji. And yes, Janish ji, the floor is yours to address the students. Thank you.
Thank you so much, sir. So, just a minute, I will share my PPT. So, good morning, friends. So, as Pramod Jain sir also told that tax audit clauses are not limited up to 1 to 44 clauses. Mainly, all the sections majorly covering Income Tax Act will be covered in this clause 1 to 44. So, before deep diving into clause 1 to 20, let us first understand what is the applicability of tax audit. So, this section 44AB mainly covers the applicability of tax audit. The main point which we need to look into is the turnover limit for this applicability of tax audit. So friends, not going into very much technicality, I have made everything in a lucid and simple manner so that you can understand in a better way. So first and foremost thing, in case of profession, the tax turnover limit is 50 lakhs. If your turnover or gross receipt crosses 50 lakhs, then mandatorily you have to conduct audit. In case of business, the limit is 10 CR. You may ask that it is 1 CR. Some may ask it is 2 CR. But friends, the limit of 44 AB subsection A is 1 CR, and the proviso of 44 AB says that in case there is a digital receipt and payment, some may think there is a limit in case of digital payment of receipt or payment. No, the condition is and. You have to consider digital payments and receipts. If is more than 95% of total receipts and payment, then the 1 crore limit has to be considered as 10 CR. So if your turnover crosses 10 CR, you have to conduct audit mandatorily. But in case if it crosses 1 CR, then also you have to conduct audit mandatorily. Some may ask, so there is a limit of 2 CR. Yes, friends. But let us consider, we will take this 1 CR and 2 CR when the 2 CR limit will be applicable, when the limit of 1 CR will be applicable. But before that, there is one another profit limit option. So for professionals, if your profit lower than limit of section 44 ADA, now what section 44 ADA says that in case of profession, if your turnover is less than 50 lakhs and your income exceeds basic exemption limit and you have not shown 50% of the profit, then you have to conduct audit mandatorily. I am correcting here. 44 ADA does not say about audit. 44 AB only talks about audit. But 44 AD is in with reference with section 44 ADA. There is no confusion in this profession case. But in case of business, it is like hotpot. Business, there is a limit of 1 CR. Business, there is a limit of 2 CR. There is a limit of 10 CR. It considers 6% or 8% criteria of profit. So let's talk one by one. In 44 ABA talks about if your turnover crosses 1 CR, then you have to conduct audit mandatorily. But in case of 1 CR to 2 CR, there is an option with the SSE that if you opt for section 44 AD. Now what is section 44 AD? 44 AD1 talks about that up to 2 CR, you can opt for 6% or 8% or maybe higher profit, and you don't have to conduct your audit. Now let us consider when 6% profit will be considered. in case of all the digital payments, the 6%, you can show 6% profit. And in case of other than digital payment, you can show 8% of the profit. And one more thing, what will be considered in this digital payment? All the online transactions. If you are receiving check, then it should be account pay check and account pay bank draft. In case of other than account pay check and other than account pay bank draft, it will be considered as non-digital payment or as good as cash payment. So 4481 talks about 6% or 8% that you can opt in for section 4480 and you don't have to conduct the audit. But you have to compulsorily maintain books of accounts. Now coming towards the tax audit criteria, 4480 subclause 4, subsection 4 talks about that in case your income exceeds basic exemption limit and the provision of section 4480 subsection 4 applies, then you have to conduct audit mandatorily. Now let's go through example so you will get better understanding for this 4484 and when income exceeds basic exemption limit. See this applicability of section 4480 subsection 4. If SSE had never opted for 4480, then subclause E of 44AB is not applicable. Now we are not considering this subsection 44AB subclause E. First we will go through certain examples, then you will get better idea about 44AB subclause E and when the 4480 subsection 4 will apply and when it will not apply. So friends, in simple manner, let's take an example. Mr. A is engaged in business of textile and his turnover is 1.5 CR. Don't take into consideration any profit. Don't take into consideration any digital payment. Just his turnover is 1.5 CR. Whether audit will be applicable? Yes. 44AB subsection A says subclause A talks about if your profit turnover crosses 1 CR, then audit will be applicable. So in simple terms, in this case, audit will be applicable. In case of Mr. B, the turnover is 80 lakhs. We are not considering any profit criteria. We are not considering any digital payment criteria in this, but just we are considering turnover. See friends, you will get many confusion in this section 44AB and section 44AD that whether profit will audit will be applicable or not. So we will go step by step. First we are considering only turnover criteria. So whether audit will be applicable, the answer is no in case of Mr. B because the turnover is 80 lakhs. Now take Mr. A's case. See, I have told 44AB A says that anyone who has turnover of more than 1 CR has to mandatorily do audit. But there is an option from 1 CR to 2 CR that the SSE can opt for section 44AD and he can declare 8% or 6% or any higher percentage of profit. In that case, you don't have to do audit. But if he declares any profit percentage lower than 6% or 8%, then in that case, also he can he don't have to do audit. See, I am again saying, if he is declaring less than 6% or 8%, then also he don't have to do audit. 44AD subsection 4 talks about only and only when you opted out of section 44AD subsection 1. In see, we will bifurcate 44AD in 2 block periods. The block period A, which when the SSE has opted section 44AD. So if you are opting section 44AD and showing 6% or 8% of the profit, then for the consecutive 5 years, you cannot opt out of that section. If you opt out from that 44AD, then the proviso of then section 44 AD subsection 4 will apply. And in case your business, in case your income exceeds basic exemption limit, then you have to do audit mandatorily. See, this is what I am talking about. Applicability of section 44 AD subsection 4. If SSA had never opted for 44 AD, then 44 AB subclause E audit will not be applicable. We are talking about block period A. When you have opted section 44 AD and you are showing 6% or high, 8% or any higher percentage of profit, and you have opted out, then this applicability of section 44 AD subsection 4 will come into picture. If SSE opts out from section 44 AD but declare profit more than prescribed limit for next 5 years, then the subsection shall not apply. Now, what this says, I have opted out of section 44 AD, but I am declaring profit more than the prescribed limit of 6% or 8%. So ultimately, that shows I have not opted out of section 44 AD. 44 AB subclause E audit will be applicable when the SSE falls in this clause tax audit is required for 6 years. When this 44 AB E will be applicable for 6 years when you opted out of section 44 AD, then for consecutive 6 years you have to do audit, subject to the condition that your income shall exceed basic exemption limit. Now, let's take an example. I have opted out of section 44 AD, then I have to do the audit. I have a turnover of 50 lakhs and I am showing 1 lakhs profit. I have no other source of income, no other income. So whether my income exceeds basic exemption limit, the answer is no. But I have shown profit less than 6% or 8%. So it shows I have opted out of section 44 AD. So in that case, whether I have to do the audit, the answer is no, because there are 2 conditions to be fulfilled, that you have to be opted out of section 44 AD and your income shall exceed basic exemption limit. Friends, there are many confusion regarding section 44 AD, that many of you may think that audit is applicable under section 44 AD. But friends, that is wrong assumption. Audit is applicable under section 44 AB, but in reference with section 44 AD. Moving further to our Mr. B's case. In case of Mr. B, this is his first year of business. So in prior years, he has never opted for section 44 AD, right? Because his business is not in existence. So there is no point that section 44 AD subsection 4 will come into picture in his case. Even though his turnover is 80 lakhs, even his profit is less than 8% or 6%, then also he don't have to conduct audit, because he has not opted out of section 44 AD. So section 44 AD subsection 4 will not apply in his case. Moving further, see, check this slide. In this example, Mr. B did not satisfy any of the following conditions. He will not fall in any of the section where he has to do audit, because he has not opted out of section 44 AD subsection 1. So what 44 AB A talks about, turnover more than 1 CR, then you have to do audit. In case of Mr. B, turnover is only 80 lakhs. So he don't have to conduct audit in 44 AB subclause A. What subclause B talks about, in case of profession, if your gross receipt crosses 50 lakhs, then you have to conduct audit. So Mr. B will not fall in subclause B. In case of subclause E, what subclause E talks about, presumptive income in case of 44 AE or 44 BB. What 44 AE we will discuss further. Subclause D, he is not engaged in 44 ADA profession. What is 44 ADA profession? That specified profession, CA, doctor, architect, they all are covered under section 44 AD specified profession. So Mr. B is in business of textile. So 44 AB subclause D will be not applicable to him. 44 AB subclause E. This may attract in case of Mr. B when he has opted out of section 44 AD. But in this case, Mr. B has not opted out of section 44 AD. So 44 AD subsection 4 will not be applicable to him. So he did not satisfy any of the condition of 44 AB subclause A to subclause E where the audit criteria is specified. So in this case, Mr. B has doesn't have to conduct audit. But remember friends, in section 44 AA, he has to maintain his books of accounts. Moving further, we are taking alternative scenario. See, this is the data of 5 years in case of Mr. B. He starts his business in 16-17 and his turnover details are given below. In 16-17, turnover is 75 lakhs and he has shown 5% profit. So whether audit will be applicable? No, he has not opted out of section 44 AD as this is the first year of his business. So he don't have to conduct audit as we have seen in this slide. In the second year, the turnover is 1.25 CR and he has shown 5% of the profit. So whether audit will be applicable? Yes. As the turnover crosses 1 CR, audit will be applicable in case of 44 AB subclause A. If Mr. B has shown in 17-18 8% or any higher percentage of profit, then it may be presumed that he has opted section 44 AD and he don't have to conduct audit as the turnover is less than 2 CR. In the third year 18-19, the turnover is 80 lakhs and the profit is 5%. So whether audit will be applicable? No. Why no? Because in 17-18, the turnover crosses 1.25 CR. He has not opted for section 44 AD. He has conducted audit in 44 AB subclause A. So when you are not opting for section 44 AD, then in the next year, when your turnover is less than the specified limit of 1 CR, so audit will not be applicable in your case. But let's assume in 17-18, if the Mr. B has shown 6% or 8% or any higher percentage of profit, then in that case, he has opted for 44 AD. So for 5 consecutive years, he has to mandatorily follow section 44 AD. In case in 18-19, 80 lakhs will be the turnover, and in that year also he has shown 8% of the profit, and he is still in section 44 AD. In 19-20, turnover is 1.5 CR and he has shown 5% of the profit. So let's, whether in this case, it may be presumed that he has opted out of section 44 AD and whether audit will be applicable in this case. The answer is no. Why? The turnover is more than 1 CR. So the audit will be applicable in case of 44 AB subclause A, not subclause E. So it will not be presumed that he has opted out of section 44 AD. In the year 2021, the turnover is 90 lakhs and he is showing 5% of the profit. In this case, it will be presumed that he has opted out of section 44 AD and the audit will be applicable in this case. And for the consecutive next 5 years, which we can say block period B, he has to do audit under section 44 AB subclause E. See friends, this 44 AB in case of business in relation with 44 AD, I told you it is a hodgepodge. There are many confusions that the turnover limit is 1 CR, 2 CR, 10 CR. So we will cover all the cases in which case audit will be applicable or not applicable. Over and above 2 CR, the 44AD is not applicable in your case, then you have to conduct audit mandatorily, subject to the proviso that in case digital receipt and payment is more than 95%, then up to 10 CR, you don't have to conduct audit. Moving further, let's see, in this case, Mr. B starts business in financial 16-17 and he did not opted 44AD and didn't declare 8% of profit for any of the financial year 16-17 to 2021. We are talking about this case. Section 44AB subclause C talks about Section 44AB subclause C, Section 44AD subsection 4 and 5 speaks only and only about, see the highlighted portion, opted out SSE. Now, what is this opted out? What is the opt-in? Opt-in means you have applied for Section 44AD, you are conducting audit in Section, you are showing profit as per Section 44AD, and in case you have opted out of Section 44AD, then only 44AB subclause E will be applicable. So only if he opts in for 44AD, question regarding opt-out arise. If you don't opt in for 44AD, then there is no question of opt-out. Only when question regarding opt-out arise, we have to consider applicability of Section 44AB E or 44AD subclause 4 or 44AD subsection 5. When you have not opted out, this clause will not come into picture. You don't have to conduct audit in any of the sections. So based on these two examples, we can come to conclusion that if the turnover is less than 1 CR and if he declares less than 8% profit, no section in the Income Tax Act mandates him to do audit as per Section 44AB, unless he has opted out of 44AD in any of the previous financial years. So for the criteria or conducting of audit, opt out from Section 44AD is more important. If you have not opted out, then 44AB subclause E or 44AD subsection 4 will not come into picture. So if his turnover is less than 1 CR and if he maintains book, he can show any profit percentage. And no section in Income Tax Act specifies about mandatory audit for the case of Mr. B. Audit as per Section 44AB subclause E is applicable only for who has opted out. You have to check whether he has opted in, whether he has opted out. This is very critical. Let's take an example. Till financial year 16-17, there is no criteria of income exceeding basic exemption limit. So if you are declaring profit less than 8% or 6%, then you have to do audit. But when you read Section 44AD subsection, then you will get a clear picture. And I always say, friends, make a habit of reading Bare Act. See, you will get many materials on Google which will give you lucid and simple way analysis of the section. But when you will practice in future, the Bare Act is our Bhagavad Gita. Without Bare Act, without reading of Bare Act, you cannot come into conclusion to anything. And that Bare Act will guide you in all the manners. So always keep a habit of reading a Bare Act. Even I will show you Section 44AD, the as per the Bare Act. Let me share that. I hope this is visible to you, friends. So,
Yes, sir, it is visible.
Yeah. So, friends, The section 44 AD subsection 1, what we have talked about, it says notwithstanding anything to contrary contained in section 28 to 43C. What this section 28 to 43C? It is all the section related to PGBP. In case of an eligible SSE engaged in an eligible business, a sum equal to 8% of the total turnover or gross receipt of the SSE in the previous year on account of such business, a sum higher than the aforesaid sum claimed to have been earned by the eligible SSE shall be deemed to be profit and gain of such business chargeable to tax under head PGBP. So as we have already discussed, 44 AD subsection 1 talks about in case you source 8% or any higher percent of the profit, then you don't have to conduct audit under subsection 44 AB. What the provided that 8%, the word 6% has been substituted in respect of amount of total turnover or gross receipt which is received by an account payee check or account paid bank draft or any electronic clearing system. So 6% or 8% or any higher percentage of profit, section 44 AD subsection 1 will come into picture and you don't have to conduct audit under section 44 AB. Moving towards subsection 4, where an eligible SSE declares profit for any previous year in accordance with the provision of this section, and he declares profit for any of the 5 assessment year relevant to the previous year succeeding such previous year, not in accordance with the provision of subsection 1. This subsection 4 gives you reference about subsection 1 that if the SSE opted out from 44 AD subsection 1 is not showing profit as per section 44 AD subsection 1, he shall not be eligible to claim the benefits of the provision of this section for 5 assessment years subsequent to the assessment year relevant to the previous year. So for consecutive 5 years, the 44 AD subsection 1, you cannot opt in for 44 AD subsection 1, and it will be considered as you opted out of section 44 AD subsection 1. You will fall under section 44 AD subsection 4, and if your income exceeds basic exemption limit, see here it is clearly mentioned, notwithstanding anything contained in the foregoing provision of this section, an eligible SSE to whom the provision of subsection 4 are applicable and whose total income exceeds the maximum amount which is not chargeable to income tax. See, this criteria is very important. If your total income is below the basic exemption limit, then also subsection 4 and 44 AB subclause E will be applicable. So this amendment has came from financial 16-17 only. Before that, if you are declaring any profit lower than 8% or 6%, then you have to conduct audit mandatorily. But 2 conditions you have to keep in mind. You have to be opted out of 44 AD subsection 1. So ultimately subsection 4 will be applicable, and your income should exceed basic exemption limit. Then you have to do audit mandatorily. Now coming back to our presentation. See friends, I hope section 44 AB and section 44 AD is clear to all of you. Moving further, we will talk about the calculation of turnover for share market transactions. There are various, we can say, confusion relating what will be the turnover in case of share market transaction. Some may say that sale value will be considered as share market transaction turnover. Some may say that positive difference may be considered as turnover. But let's go through one by one. In case of delivery based transaction, what is delivery based transaction? That where an investor or buyer holds his stock more than a day and then sell them anytime. So delivery based, when you are buying in the morning and squaring off before 3:30 the closing time of the market, then it will not be considered as delivery based transaction. Even if you may see that you have purchased any particular share, not in intraday, but in normal course, but you are getting ultimately good profit before the closing of the market, and you have sold that shares, then it will not be fall under delivery based transaction. It will be considered as speculative transaction or intraday transaction. So in case of delivery based transaction, where an investor or buyer holds the stock more than a day and they'll sell them anytime, the total value of the sales consideration is to be considered as turnover. In delivery based transaction, the total sale value will be considered as your turnover. It is important that above calculation of turnover for delivery trades applies only and only when you are equity based delivery trade announced as business income. See, in case of delivery base, the SSE may show this transaction as capital gain. When the SSE is showing this transaction as capital gain, it will not be considered as business income, and you don't have to work out any turnover criteria, because audit will not be applicable in that case when it's showing as his capital gain income. I am talking only about delivery based transactions, so this will cover only equity based transactions. Future and option, it is specifically mentioned that it will be considered as the business trading. So equity based transaction, when it will be delivery based transactions and you are showing as business income, then only the criteria of turnover calculation will come into picture. In case of delivery based transactions, total sale value will be considered as turnover. Let's take an example. If you have bought 100 Tata shares at rupees 800 and sold them at rupees 820, so whether this difference of 20 rupees will be considered as turnover? No. In case of delivery based transaction, the full sale value, that is 82,000, will be considered as your turnover. No difference will come into picture in delivery based transactions. The total sale value will be considered as your turnover. Moving further, in speculative transactions, what will be covered under speculative transaction? All the intraday equity trading. Again, F&O will not be covered under speculative transactions. Only intraday equity trading will be covered under speculative transactions. Now, let's assume that you are trading in SBI shares. You buy 200 shares of SBI at rupees 300 and at the time of opening of market and sell at 320 by day closing. You make a profit of positive difference of rupees 4,000. So whether this 320 into 200 will be considered as your turnover, which we have seen in these delivery based transactions, the full sale value will be considered as turnover. The answer is no. In speculative transactions, the aggregate or absolute sum of both positive and negative differences from trades is to be considered as turnover. See friends, not only the positive difference will be considered as turnover. In this case, you have to consider negative difference also. Without looking into the sign of minus, all the positives total, all the aggregate of positive and all the aggregate of negative will be considered as your turnover. So even in this case of SBI, if your loss of rupees 3,000 on the next day, so total 4,000 of this current day and 3,000 of the next day, total 7,000 will be considered as your turnover. It will not be the case that 4,000 minus 3,000 and 1,000 will be considered as turnover. That will be your net profit. But turnover will be 7,000. So you have to keep in mind, in case of speculative transactions, all the aggregate or absolute sum of both positive and negative differences from trades is to be considered as turnover. Moving further, non-speculative transactions. It will cover all the derivative transaction, all the future and option transaction. See, In this case also, all the favorable and unfavorable differences should be taken as turnover. In case of derivatives and futures, in case of options, premium received on sale of option is also to be included in turnover. In respect of any reverse trade entered, the difference thereon should also be form part of turnover. So three things: all the favorable and unfavorable difference shall be taken as turnover. Till 2021, the premium received on sale of option is also to be included in turnover. Means, let's take an example. If you have purchased Nifty options and you have incurred a loss of 10,000 rupees, so that 10,000 will be considered as your turnover. And when you sell that option, let's say you have sold that option in rupees 100 and Nifty lot size is 50. So 50 into 100, 5,000 that you will receive as premium on the sale of the or writing of the option. So this 10,000 plus 5,000, total 15,000 has to be considered as your turnover till 2021. But in this latest guidance note, which Chitle sir told that has been released on 19th August, the ICI has clearly mentioned that in case of option where the premium received is included for determining net profit for transactions, the same should not be separately included. Now, this has created many confusions. In case of options, where the premium received is included for determining net profit for transaction, the same should not be separately included. Taking the same example, you have incurred 10,000 loss and you have received 5,000 as a premium on selling of the option. Now, after the clarification or this latest guidance note, only 10,000 will be considered as your turnover. That 5,000 has already been included in this 10,000 as you have squared off your positions. But let's take an example. You have not squared off your position. You have that underlying asset and it is the position of April. You have not squared off on 31st March. So what will be the case? In that case, the premium received on selling of option will also be considered as turnover in the month of April. Let's take an example. What is the scenario before and what is the scenario after? If you buy one lot of Nifty futures at 17,400 strike price and sell at 17,500 strike price, then favorable difference would be 5,000. Nifty lot size is of 50 units, right? So 50 into 100 will be 5,000 your favorable difference. And again, you buy one another lot of Nifty future at 17,550 and sell at 17,500. So you will incur a loss of 2,500. So whether 5,000 minus 2,500 equal to 2,500 will be considered as your turnover? No, that will be your net profit. But what will be the turnover? 5,000 plus 2,500, 7,500 will be your turnover. Now, in case of futures, in case of derivatives, there is no confusion. Your favorable and unfavorable difference will be your turnover. But in case of option trading, there are a lot of confusions. We can say that ICI has clarified with this guidance note. So the whole calculation will be different from now onwards. Let's take an example that you have purchased one lot of X options. Purchase amount is 1 lakh, sale amount is 1.5 lakh, profit is 50,000. So this 50,000 will be considered as turnover in relation with this new mechanism. We can say that after clarification in guidance note, only and only 50,000 will be considered as turnover. But before this clarification in guidance note, you have to take this 50,000 into picture and the sale amount which you have received on writing of options that also you have to add in your profit as the turnover. So in old mechanism, what the turnover will be 2 lakhs will now be turnover as 50,000 only. Again, in case of one lot of Y options, 3 lakh is the purchase amount and sale amount is 3.1 lakh. So profit will be 10,000. So only 10,000 will be your turnover as per new mechanism. In case of one lot of Z option, 5 lakh is purchase amount and 4.5 lakh is sale amount, negative 50,000. So this unfavorable difference also to be considered as a part of your turnover. So as per new mechanism, only 50,000 will be considered as turnover. Now let's see, in this case, when you are incurring loss, that as per new mechanism, only 50,000 will be considered as your turnover. But in old mechanism, 5 lakh would be your turnover, 50,000 plus 4.5 lakhs. So totaling this 50,000, 10,000 and 50,000, as per new mechanism, your yearly turnover would be 1.1 lakhs. But see the old mechanism turnover difference, it will be 10.2 lakhs. So basically it will cross 10 CR turnover who is a regular trader in F&O easily, and he has to do audit mandatorily. Up to 10 CR he has option because all the share market transaction is 100% digital. But when the turnover crosses 10 CR, he has to do audit mandatorily, as we have seen the proviso of section 44 AB subclause A. This new mechanism is highly beneficial to the traders who is doing trading daily in the F&O transactions. His turnover calculation will be much lower than what he used to show actually up to 2021. So friends, I hope this calculation of turnover is clear. Let's recapitulate. In delivery base, the sale consideration will be considered as your turnover. In speculative, aggregate or absolute sum of both positive and negative difference would be considered as your turnover. In case of F&O, total of unfavorable or aggregate of favorable and unfavorable difference shall be taken as turnover. In case of options where the premium received is included for determining net profit, the same should not be separately included. Otherwise, if it is not included for determining net profit, then that premium received on sale of option is also to be included in turnover, which you have clearly seen in this case of new method of calculation. So I hope calculation of turnover is also clear to all of you. Now, moving further, we will take the discussion of clause 1 to 20, clause by clause, and certain basic of tax audit. So let me share with you the screen. I hope this is visible. Okay. So what will be our coverage? What is the applicability of tax audit? We have already discussed, and there is one clause in the form 3CD also. So we'll recapitulate all the applicability of tax audit. When the form 3CA or 3CB will be applicable? There are many confusions regarding this applicability of form 3CA or 3CB, that many of you may think that in case of companies, form 3CA is applicable, and in all other case, form 3CB is applicable. So let me clear you friends that form 3 is not applicable only in case of companies. It is applicable when you are covered under audit, any other audit other than Income Tax Act. So it may be audit under Companies Act, it may be audit under Societies Registration Act. So any other act mandates you to conduct audit other than Income Tax Act, then in that case, your SSE will has to opt Form 3CA. Now, let's understand that if you are doing audit under Partnership Act, whether Partnership Act mandates you to do audit, the Partnership Act is silent about this audit criteria. So in that case, Form 3CA will not be applicable. Form 3CB will only be applicable in that case. So any other act which mandates you to conduct audit, then only Form 3CA will be applicable, and in other all cases, Form 3CB will be applicable. Now, what will be the due date for filing tax audit report? For assessment year 22-23, it is 30 September, unless otherwise extended. And for filing the return of income, it is the next month, means 30th October. 31st October in case of filing of return. What will be the penalty in case of non-compliance? If you have not filed your tax audit report up to 30th September, then what will be the consequences? The penalty will be 0.5% of the turnover or 1.5 lakhs, whichever is lower. So the penalty is huge. So make sure you file all your tax audit report within due date. Now we will go clause by clause discussion on Form 3CD. Moving further, what clause 1 talks about? Clause 1 asks you about the name of the SSE. See, clause 1 to 8 are general clauses, and you may think that it is asking about the name of the SSE. Clause 2 asks about address of the SSE. So why there is a need of discussion on these clauses? There are many mistakes done by the students in these clauses also. Let's take an example. The name of the SSE, you have to mention as per the certificate of incorporation in case of company, as per partnership deed in case of partnership firm, or any other document readily available with you. If the tax audit is of branch, name of the branch should be given along with the name of the SSE. While conducting tax audit of the branch, many times it has been seen that only the name of the SSE has been mentioned and the branch name has not been mentioned in this subclause. And let's take an example. If the name of the company during the year 21-22 is X Private Limited, but in December, the X Private Limited has been changed to Y Private Limited. So there are two names. So whether you have to mention X Private Limited or Y Private Limited or both. So as on 31st March, what will be the name of the company would come under clause 1 as Y Private Limited, but you have to give note that it has been formally known as X Private Limited. And even in case for the year 21-22, the whole year, the name of the company is X Private Limited, but before signing audit report, you have come to know that the name has been changed to Y Private Limited. Then also make sure that you give notes to this clause 1 and mention that the name has been changed to Y Private Limited. So friends, this clause, there are total 1 to 44 clause in Form 3CD. It is not just about reporting what has been asked in this clause 1 to 44. You have to give many notes, footnotes to these clauses, which you may think that it has to be given. And this clause 1 to 44 is not only about reporting aspects. As Pramod sir told in his initial conduct that clause 1 to 44 has many sections associated with these clauses. So you have to read each and every section to get better understanding of these clauses, and you have to report accordingly in these clauses. So clause 1 talks about name. Clause 2 talks about address of the SSE. Now in this address, there are many confusion. Which address we have to give? Whether the address of the registered office, whether the address of the office is where the operations are conducted. In case of proprietor, whether the address of the address mentioned in his any registration certificate or his Aadhaar card or any other proofs. So in this clause 2, you should mention address of the registered office or the address which is there in your income tax portal, which you have communicated to the income tax department for easy assessment. So mention that address in clause 2. It should not be that it may be possible that administrative or corporate office is different from the registered office. The address of the same should also be given under this. So first of all, mention the address which you have given to the income tax department, or which income tax department is coordinating with you for all these communications. Mention that address. In case that address is different from registered office and administrative office, mention all the 3 addresses in that. Clause 3 talks about PAN. You have to mention your PAN in clause 3. In case you are doing audit of any of the SSC for the first time, take the registration certificate, take the PAN card copy. These are the audit checklist and audit documentation which you have to maintain. If you are conducting audit for the first time, take all the documentations, all the audit documentations for your references and for your working papers from the SSC. So take the PAN card copy and mention that PAN number in clause 3. Moving further, clause 4 talks about registration under indirect tax laws. Now, you have to mention all the registration you have to taken as per indirect tax laws, that is GST registration. Even you have to mention IC registration, custom registration, any registration granted to you other than Income Tax Act. So all the indirect tax registration you have to mention in clause 4. Now, let's take an example that the VAT registration has not yet been surrendered by you because the assessment has been going on, or the service tax assessment has been going on. So whether you have to mention that in clause 4, the answer is yes. If any assessment is going on under VAT or in service tax, then you have to mention that also in this clause 4. Otherwise, and let's take an example that the SSC has to take registration under GST law, but he has not taken the registration. So whether you as an auditor has to give any note to this subclause 4, because what subclause 4 asks about? Clause 4 asks about registration taken as per indirect tax laws, and you have to mention that registration in this clause 4. But in case the SSC has not taken registration, even he has to take the registration compulsorily under any tax laws, then you have to give the footnote as an auditor that the SSC is liable to register under GST law, but he has not taken the registration. So friends, I hope this clause 4 is clear. You got my point of view that in case the SS is liable to take any registration, but he has not taken any registration, so you have to give that as a footnote. The SSC may have multiple registration for various manufacturing units. In such circumstances also, a copy of all registration certificate is to be obtained from the SSC, and all the registration has to be disclosed in this clause 4. Let's take an example. I am doing business from Gujarat and I have taken registration for Maharashtra, for MP, for Delhi. So I have in total 4 registration. So all the 4 GST number has to be disclosed in this clause 4. The auditor should obtain from the SSE the list of indirect tax applicable to him. Once the auditor obtains this management representation, he is required to obtain a copy of the registration certificate clearly mentioning the registration number under the relevant law. So these are the points of your working paper. You have to obtain registration certificate in order to input your data in clause 4. And you have to take management representation letter that we are registered under this indirect tax laws. So that will be a working paper which will be give you a clear idea. In case the SSE has taken the registration of customs, but you may not be aware that SSE has taken the registration of custom, and the SSE is not doing any business regarding that. So looking into accounts, you may not come to know that the custom registration has been taken. But in MRN, the SSE will mention all the GST registration, all the custom registration, and all other indirect tax registration. So you would come to know that SSE has custom registration also. So you have to mention in that clause 4. Moving further, clause 5 talks about status. This status is not about the residential status of the SSE. The status as per Income Tax Act, as per section 2, that is person is either individual, private limited company, trust, AOP, BOI. So clause 5 talks about that status. Clause 6 talks about previous year and clause 7 talks about assessment year. In India, everyone is following financial year end as 31st March. So there will be no confusion regarding previous year, 1st April to 31st March, or in case of new business, the starting of the business till the 31st March will be the previous year, and the relevant assessment year has to be mentioned in clause 7. See, this clause 8, we have done the detailed discussion of this clause 8 while covering the applicability of the tax audit. Clause 8 asks you about selection of relevant subclause where the audit will be applicable. I already said audit is applicable under section 44AB only. 44AD, 44AE, 44ADA, nothing mandates you to audit. It will give reference to section 44AB. So 44AB, let's recapitulate what 44AB talks about. Every person carrying on business shall get its account audited if receipt of business exceeding the specified limit. What the specified limit we have already covered, 1 CR. In case of digital payment, it will be converted to 10 CR. And from 1 CR to 2 CR, there is option with the SSE. But in case if it exceeds 1 CR and SSE is not opting 44AD, then you have to do audit under section 44AD subclause A. What this subclause B talks about, every person carrying on profession shall get account audited if gross receipt in the profession exceeding specified limit, that is 50 lakhs. 44AB subclause B talks about profession and the limit of 44AD subclause B is 50 lakhs. If you exceed 50 lakhs, the gross receipt of any profession exceeds 50 lakh, you have to mandatorily do audit under section 44AD subclause B. Now, what subclause C talks about? Profit and gain lower than deemed profit under section 44 AE or double B or triple B. Now, what this 44 subsection AE? It is for the transporter. So deemed profit, you may be aware that if your truck is lower than 12 tons, then 7,500 into number of months you have to show as the under section 44 AE. If it is lower than that, then you have to do audit under section 44 AD AB subclause C. In case your truck has more than 12 tons of weight, then the profit criteria is different for 44 AE. That you have to consider 1,000 into number of months into the lading weight or unladen weight. but we are restricting ourselves up to subsection audit applicability. So if you are showing any profit lower than 44 AE or double B or triple B, then you have to do audit under section 44 AD subclause C. What this 44 AB subclause D talks about? Profit and gains lower than deemed profit under section 44 ADA. 44 ADA is applicable only to specified SSE, a specified profession. Specified profession such as CA, doctors, architectures. These all are the specified professionals. So if you are showing profit lower than 50%, if the specified professional shows profit lower than 50%, then he has to conduct audit under section 44 AB subclause D. The 44 AD subclause AB subclause E, what it talks about, we have already covered, and we have taken each and every example for this. That provision of section 44 AD subsection 4 should be applicable, and along with that, your income should exceed the maximum amount which is not chargeable to income tax. If your income does not exceed and 44 AD 4 applicable, then also you don't have to conduct audit. If 44 AD is not applicable and your income exceeds basic exemption, then also you don't have to conduct audit. Both these condition has to be fulfilled, because the criteria is and not or. So if both these condition fulfills, you have to conduct audit under section 44 AD subclause AB subclause E. So I hope from A to E everything is clear to you. Moving further, clause 8A. This is newly inserted clause last year, that whether SSE has opted for taxation under section 115BA, BAA, BAC or BAD, you don't have to mention any profit or turnover or any criteria which has been mentioned in BA, BAA, BAB, BAC, BAD. You have to simply mention yes or no whether the SSE has opted. 115BA, BAA or BAB is for domestic companies. BAC is for individual HUF, that they can be under the new tax regime, that you don't take any deductions, then the new tax rate will be applicable to individual or HUF. 115 BAD is for cooperative societies. It has been inserted so that it can be in line with 115 BA or BAA or BAB. Before, the cooperative societies has been taxed at 30%. If they opt for BAD, they can also take the benefit of 22% tax rate, as similarly mentioned in BA, BAA or BAB for domestic companies. So BAD has been inserted just because that it can be synced with the domestic companies tax rate. So friends, see, clause 1 to 8 are general clauses, but still there are many sections which you may not be aware or which you may be aware. You have to report for that section under these clauses. So you should get clear ideas of what that section talks about. Moving further, clause 9 to 44, we will restrict ourselves up to clause 20. What clause 9 talks about? Details regarding firms or AOP or LLPs. Clause 9A talks about if firm or AOP indicates name of partners or members and their profit ratio. You have to mention the name of the partners and that their PSR ratio. This PSR ratio includes loss sharing ratio also. In case there is a different loss sharing ratio in the partnership deed, you have to report both the profit sharing ratio and loss sharing ratio in this clause 9A. See, it should be as per the partnership deed or constitution deed. The name of the partners or members and their PSR during the entire previous year should be given. In case name and PSR of minor partners should also be given. And this PSR covers loss sharing ratio also. So simply for reporting under clause 9, take the partnership deed from your from the SSE or your client. Take MRN from the client, that is there any changes during the previous year in the partnership deed. If there is any changes, take the new partnership deed also from the client. Because in clause 9b, you have to mention if there is any change in the partners or members or in their profit sharing ratio since the last day of the preceding year, the particulars of such change. So in case there is any changes regarding partnership, partners or their PSR or loss sharing ratio, then you have to report in clause 9b. So this partnership deed will be the main document for reporting under clause 9. Guys, you have to take all this documentation from the client in order to have a proper working paper and audit documentation. And you can report based on that under these clauses. So this is the audit checklist that tax auditor should verify the certified copy of latest or amended partnership deed. Take all the partnership deed from the SSE. Obtain certified copy of the deeds, document, notice of change, etc. from the client. In case, let's take an example. There is a mention of remuneration sharing ratio in the partnership deed. Whether you have to mention that ratio also in clause 9, the answer is no. You only have to mention profit sharing ratio, and if loss sharing ratio has been different from profit sharing ratio, then both the ratios has to be disclosed, but remuneration sharing ratio not to be disclosed in clause 9. What if, let's take an issue that in the partnership deed, the profit sharing ratio or loss sharing ratio has not been clearly defined. It has been subject to various conditions which has to be fulfilled. But that cannot be depicted into numbers, or you cannot construe them into the numbers that this will be the profit sharing ratio for this particular partner. So what you can do under that circumstances? Simply write in the footnote that this is the profit sharing, this should be the profit sharing ratio as per the partnership deed, and annex that partnership deed where the profit sharing ratio has been mentioned as an annexer, and in the footnote you write that it cannot be considered into numbers, so the profit sharing ratio to be considered as per this annexer, and we are not able to depict the number which can be mentioned in clause 9. So annex that with the annexer and write a footnote for the case when you cannot consider that into the numbers. Now, clause 10 talks about nature of business or profession. You have to report in clause 10A what is the nature of business or profession of the SSE or the client. If there are more than one business or profession carried out during the previous year, nature of every business or profession. In regards to nature of business, the principal line of each business is to be determined and stated in this clause. In case of service provider, state the nature of each type of services. But see, this is a simple clause. You have to mention nature of business. The nature of business, if more than one business, all the nature of business. But let's take an example. If your client is indulged into X activity and also Y activity, but the Y activity has not been done for the full year, by your SSE. He has only conducted X activity during the whole year. So whether you have to mention Y activity also? Yes, you have to mention both the activities, because clause 10 talks about nature of business or profession. And if more than one business or profession is carried on during the previous year, nature of every business or profession. Sorry, I am correcting myself. You have to report only X activity, and you can give as a footnote that SSE can do Y activity also in this year or any succeeding year. Because what clause 10 talks about or asks you about reporting, that if more than one business or profession is carried, see, you have to consider this, each and every word is carried. Whether Y activity has been carried? No, the Y activity has not been carried. So you have to report only the activities which has been carried. Moving further, clause 10b, if there is any change in nature of business or profession or particulars of such change. In clause 10b, you have to report the changes in nature of business. Let's take an example. Same, the X activity and Y activity. The SSE is doing X activity for 4 months, and after that he has changed his nature of business to Y activity, and that change should be reported in clause 10 subclause B, clause 10b. But you also have to check. See, in case of companies, you cannot do any activity other than it has been specified in your MOA. So you have to check whether the requisite forms has been filed to ROC for the change of the activity and the MOA has been amended. If yes, then you mention in this clause 10b both the activities, and if no, then also you have to mention in clause 10b both the activities, and you have to give the footnote that the proper amendment has not been done in MOA, and the compliance as per Companies Act has not been done by the SSE. Now, what would be your audit checklist for reporting in this clause 10b? That obtain knowledge of client's business. You should have thorough knowledge of your client business, what he is indulged into. Refer to past tax records. You will come to know which business activity he has been indulged, and review business reports or minutes of the meeting. You will come to know any changes which has been discussed in the minutes. Now, moving further to clause 11.
Janish,
Yes, sir.
yes, just a minute. I also request you also, you can have a small water break because we are going a continuous session. And apart from that, I can also request the other students who are attending right now, we are having a very good response to this particular session, can have a small break, kind of 2-3 minutes. And I'd also request that from various queries we have received, 2 relevant queries were there. So Janish, I posted you on WhatsApp. So if you can just see that, and later on you can answer them. And friends, apart from this, let me tell you that, friends, on this 5th of September, that is, you can say we are having a Teachers' Day. And on that Teachers' Day, Board of Studies has organized one very good event for the students, for you, the students. Soon the announcement will come, but the program is live on Teachers' Day from 6 p.m. to 7 p.m. And also, you can just verify your branch website to whichever branch you belong. Your branch would be also having some program before it or after it. So we from Board of Studies request you that you can take the utmost benefit of this particular programs may be organized by your branch. And also Board of Studies has organized it. We will soon come up with an announcement that which renowned speaker is going to address you. Because we all know that whatever me or you or whatever the other stalwarts in our profession are, are purely because of either a good teacher or a good guide or a good mentor, and what is the importance of that particular mentor in our life. So we are going to have a 1 hour and very inspirational, very motivational, a life-touching talk. So I would request you all to take the utmost benefit of the same. Moreover, friends, right now, the time is going on for all of you to file your examination forms. And if you just passed out your foundation, then it's a time for you to register for intermediate level. Now, many of you might be facing the issues either for registering yourself into intermediate course or filing examination form, or you have some query, like while filing an examination form, the payment of the fees has been made, but you are not able to get the form generated, or any kind of query. Then at that point of time, my sincere request would be that whenever you are doing any such kind of procedural important work on the ICAI website, may it be SSP portal or exam department portal, whenever any such discrepancy arises, you should take the screenshot of that discrepancy. After taking the screenshot, you should do 2 things. First, on whichever website you are, on the top of that, there is contact us. There are relevant email IDs given. Kindly mail all those screenshots to that particular email ID. And in that email, please mention your name, your registration number, whatever is your query in a very lucid language, then attach the proof, then mention your name and your query in the subject, and then send to that respective email ID. And in addition to this, you can also give a telephonic call to the numbers mentioned that. But telephonic call is an additional substitute measure available. The first foremost thing you need to do is to mail to that particular email IDs. This will help you a lot in getting your queries redressed in time, because maybe registration process or maybe examination form filling process, both are to be adhered on or before the timeline which is given. And in any case, double payment has been done, then please be rest assured, every extra payment taken from you as a student will be refunded back by ICI. May it take some time to process so much lot of payments, but rest assured, all such extra payments are always being refunded by the ICI. So just because of the payment issue, you see to it that you don't miss out your timelines. So this was something from my side. Now over back to Janish.
Okay, sir. So I think we can take the queries at the end.
Yes, sir.
Okay. So moving further to clause 11. Clause 11 talks about books of accounts. See, there are 3 different criteria in clause 11. 11, it talks about whether books of accounts are prescribed under section 44AA. If yes, list of books so prescribed. 11B talks about books of accounts maintained and the address at which the books of accounts are kept. And 11C talks about the books of accounts which are maintained and which has been examined by you as an auditor. See, in majority of the cases, it has been seen that mistake has been happened in this clause. That in the audit report, clause 11A, B, and C, in all the 3, people are doing the same reporting. In 11A, what it asks about whether the books of accounts are prescribed under section 44AA. If yes, list of books so prescribed. So what are prescribed under 44AA? You have to mention that books of accounts in clause 11A. But whatever has been prescribed may not be the seen that the same books of account has been maintained by the SSC. He has to maintain the books of account prescribed under section 44AA. But there may be a case that it has not been maintained by the SSC. So in 11B, you have to report what are the books of accounts maintained and the address at which the books of accounts are kept. See, here also majority of the mistake has been incurred while reporting clause 11b, that address, in many cases, address you are fetching from the software or utility. So it will fetch the registered office address or the address which has been maintained in the master data. But it may not be the case that the same address, at the same address, the books of accounts has been maintained. So you have to mention the address at which the books of account has been maintained. Let's take an example. Books may be maintained at the registered office. If it has been maintained at the registered office, then you have to mention that address in 11b. But in case, what if the books of accounts has been maintained on cloud server? Or what if the books of account has been maintained other than the registered office? So you have to mention that address where actually the books has been maintained. In case of cloud server, you have to mention the static IP address, that at this IP address the books has been maintained. In case books are maintained other than registered office, then you have to maintain that address as the books of accounts maintained. But let me clarify again in 11b, in case of companies, if your books of account has been maintained other than the registered office, then you have to check whether the ROC compliance has been done by the company. You have to check the relevant compliance regarding that. And in case if it has not been done, then you have to mention as a footnote to 11b. See, various books of accounts which has been maintained by the client are cash book or general register or fixed asset register, purchase register, sales register. These are the not the exhaustive list, just an illustrative list. Now, it may be a case, books of accounts, let's take an example, cash book, sales register, purchase register, bank register has been maintained by the SSE. But as an auditor, due to limitation of scope or limitation of time, you have not analyzed or not examined the cash book. So whether that has to be reported in 11C? The answer is no. 11C asks about list of books and nature of relevant document examined. If you have not examined the cash book, then you don't have to report in 11C that cash book has been examined. In majority of the cases, it has been seen that whatever is disclosed in 11B, the same has been reported in 11C. But friends, let's not make that mistake again. 11C asks about list of books and nature of relevant documents examined. So whatever you examine as an auditor, that only has to be reported in 11C. Clause 12, it asks about whether the profit and loss includes any profit and gain assessable on presumptive basis. If yes, indicate the amount and relevant section. If the assessee is engaged in more than one businesses and his profit and loss also includes any of the profit of section 44 AD or AE or BB or chapter 12G, so you have to mention and report that in clause 12. And see, there may be a point that the assessee is engaged in two business. One business is normal business and another business he has shown the presumptive income. So it may be a case that difficulty may arise for apportionment of the common expenses. What expenses should be apportioned to the presumptive basis income? What expense should be apportioned to the normal business income? So in case if you are not eligible to apportion the common expenses to both the businesses, then write a footnote to this clause 12 that it is practically difficult to apportion these expenses to both the businesses, and whatever profit has been mentioned in the profit and loss account about the presumptive income that you have to report in clause 12. Again, check what clause 12 ask about whether the profit and loss includes any profit and gains as assessable on presumptive basis. So if it includes any profit, the answer is yes, and you have to indicate the amount and the relevant sections. This is the list of the relevant section of presumptive basis. So you don't have to comment upon whether that profit which has been disclosed in profit and loss is correct as per presumptive basis or not. You have to report what has been reported in profit and loss account. Now clause 13 talks about method of accounting. 13A, method of accounting employed in the previous year. What method your assessee or client is following, you have to mention in clause 13, whether mercantile basis or cash basis. See, there is hybrid basis is not at all permitted. You can either follow cash basis or mercantile basis. However, assessee can adopt cash system for one business and mercantile for other business. But assessee has to consistently follow the method of accounting. So in case of more than one business, you have to report in this particular business it is cash basis, and for Y business it is mercantile basis. So you have to report both the method of accounting in clause 13. What 13B talks about, is there any change in method of accounting employed vis-a-vis the method of accounting employed in the immediately preceding previous year? If you are following cash system in the preceding year and in current year you are following mercantile system of accounting, then you have to mention that change in clause 13B. You just simply have to mention any change in accounting policy will not come in 13B. Only the change in method of accounting will come under clause 13B reporting. What clause 13C talks about, if there is any change in method of accounting, see, change in method of accounting, not in accounting policy. So if there is any change in accounting method, then you have to give details of such change and effect thereon on profit and loss account. So any increase or decrease due to such change has to be reported in clause 13C. The tax auditor's duty regarding change of method of accounting is not merely limited to stating yes or no. He should ensure that the change is an acceptable change, and that change which will impact profit and loss, you have to report in 13C any increase or decrease in profit for due to such change. What clause 14 asks about? Method of stock valuation. 14A asks about the method of valuation of closing stock employed in the previous year. See, you don't just have to report under 14A what is the method of valuation of closing stock, either cost or NRV, whichever is lower, either it is been mentioned as per cost. You as an auditor has to check that whether the assessee has followed accounting standard 2. As earlier told, this clause reporting is not merely just reporting of the things which has been asked. You have to check relevant accounting standard, you have to check relevant section, whether that has been consistently followed. If there is any deviation from the accounting standard or the section which has been asked, then you have to report under that clause. What 14B talks about, that details of deviation. If there is any deviation from the method of valuation of closing stock, then you have to report whether there is any deviation and the impact of that deviation on its profit and loss. So you have to do all this working. What clause 15 talks? The capital asset converted into stock in trade. You have to report the depreciation of capital asset, date of acquisition, cost of acquisition, amount at which the asset is converted into stock in trade. Now, which amount has been taken, which has to be taken as amount at which the asset is converted into stock in trade? The amount which has been reflected or accounted in the books of accounts, that has to be mentioned as an amount at which the asset is converted into stock in trade. The particulars of clause 15 has to be furnished with reference to the previous year in which capital asset was converted into stock in trade. See friends, we all are aware that capital asset, capital gain will not be applicable in the year in which capital asset has been converted into stock in trade. Capital gain will arise in the year when the stock in trade has been sold to the market. So there may be differences in the year for capital asset to be converted into stock in trade and that stock in trade has been sold. In clause 15, you have to report in the year in which capital asset has been converted into stock in trade. What clause 16 asks about amount not credited to profit and loss account? See, in last year, in majority of the cases, it has been seen from the income tax adjustment. Many assesses has been received notice under 143(1)(a) about adjustment of income, that any income which is not credited to profit and loss account has been reported in clause 16. It has been added back. So make sure in clause 16 you report any income which is not credited to profit and loss account, and the relevant adjustment has to be done in computation of income. So the 16A, there are various examples which I have mentioned. What will be the amount which can be seen, which has not been credited to profit and loss account? Any compensation received on termination of employment, cash assistance against export, custom duties or value of any benefit or perquisites, or any sum received under the Cayman insurance policy. It may be seen that such type of income has been directly credited to the capital account, and no, it has not been routed through profit and loss account. So you have to report such items in clause 16 and relevant adjustment. Don't forget to give relevant adjustment to computation of income. Otherwise, you will receive notice under 143(1)(a) adjustment from the department. So make sure you report and give relevant adjustment. Clause 16C talks about escalation claim accepted during the previous year. Now, escalation claim would normally arise pursuant to a contract. Only those claims to which the other party has signified unconditional acceptance would constitute accepted claim. You don't have to report if you have put up your escalation claim. You don't simply have to report under clause 16C. If it has been accepted unconditionally, then only you have to report under clause 16C that escalation claims accepted during the previous year. And whatever the amount of claim, you have to report under clause 16C. 16D and 16E. 16D talks about any other item of income which has not been credited to profit and loss account. And 16E talks about capital receipt, if any, which has been directly credited to, which has not been credited to profit and loss account. Let's take an example. If we have received any capital subsidy from in the form of government grants, which are in the nature of promoter's contribution. So obviously that effect will be directly in the balance sheet. There will be no effect in the profit and loss account regarding that capital subsidy. In case you have received such capital subsidy, you have to report under clause 16E. Let's take a general example, which can be seen in majority of the cases, that government grants or bank loans, which has been government grants in relation to specific fixed asset, where such grant has been shown as deduction from the gross value of fixed asset. As per accounting standard, it is allowed, and you have shown as deduction under directly from the fixed asset of that grant. So no effect has been come under profit and loss account. So that has to be reported under clause 16E. Moving further, clause 17 talks about where any land or building or both is transferred during the previous year for a consideration less than the value adopted or assessed or accessible by any authority of a state government, you have to report under clause 17. What this clause 17 asks about, it talks about that jantri value, stamp duty valuation. If any land or building is transferred for a consideration less than that jantri value or stamp duty value, you have to report in clause 17. See, as per relevant section of Income Tax Act, up to 110% deviation is allowed. But clause 17 doesn't talk about any deviation. In case it is within that deviation limit, you have to report under clause 17, because read again what clause 17 asks about, where any land or building or both is transferred during the previous year for a consideration less than the value adopted or assessed by any authority. So in case, even if it is within the deviation limit, you have to report under clause 17. Clause 18 talks about depreciation. You have to report depreciation. What is WDV? What is depreciation during the year? Any addition or deduction under clause 18. And you have to report in clause 18 not as per the books of account, but per the. So in clause 18, you have to report depreciation item. Clause 19. Generally, you may not see all the sections for the reporting under clause 19, but there may be certain section you may come section 35 scientific research expenditure. There may be a case when you can see section 35 scientific research expenditure in the profit and loss account. SSS claim deduction regarding scientific research expenditure. So you have to report amount debited to profit and loss account and amount admissible as per provision of Income Tax Act. Both may be different. SSC may have claimed scientific research of 150 rupees, but as per Income Tax Act, if the amount admissible is only rupees 100, then as per amount debited, you have to report 150 and amount admissible as rupees 100. So you have to read the section 35 for scientific research expenditure for what will be the amount admissible as per that section and what has been debited to profit and loss account. Moving further, the last clause, that is clause 20, any sum paid to an employee as bonus or commission for service rendered, where such sum was otherwise payable to him as profit or dividend. It may be seen that in case of companies, irrespective of transferring the profit, let's take an example. Company has incurred huge profit in this current year. So in order to pay less tax, they are, instead of transferring it as profit or dividend to the directors or shareholders, they are paying them as a bonus or commission. So in case any such case, you have to report under clause 20 that any sum paid to an employee as bonus or commission for service rendered, where such sum was otherwise payable to him as profit or dividend. See, why this modus operandi is followed, that if they are paying as profit or dividend, it will be taxable in the hands who has received profit or dividend, and the company cannot claim tax benefit for the expenses of that, because the profit or dividend transfer is not an expense for the company. So they are transferring it as bonus or commission. But make sure, if bonus or commission is in line with the contract with that employee, then it is allowable. 20B talks about the details of contribution received from employees for various funds such as PF or ESIC or gratuity fund. till Finance Act 2021, there are many confusion in this clause 20B reporting, that whether, see, in case of PF, the due date is the 15th of the next month. So whether the PF Act due date has to be considered for depositing the amount in government accounts, or if it is paid on or before the due date of the section 139 subsection 1 due date of return filing, so that will be allowed as expenditure. Till Finance Act 2021, there are various judgments of High Court which allows on or before the due date of return filing this expenditure, and there are various contradictory judgment which is disallowing such expenditure which has been deposited in government account after the due date of the respective act, such as PF or ESIC or gratuity. But Finance Act 2021 has clearly mentioned that the tax auditor's duty is limited to verifying whether the amount deducted from employee's salary has been paid over the government on or before due date of the respective act. It has been clearly defined in Finance Act 2021 that it should be on or before the due date of the respective act. So in case of PF, you have to consider the due date of PF Act. In case of ESIC, you have to consider the due date of ESIC Act. If you are depositing any amount after the due date of the said act, then that same expenditure will be disallowed. So I hope till clause 20, everything is clear. From clause 21 to 44, it will be on the next Sunday, as sir already mentioned. So, Fanil sir, you are there?
Yes, Janishji.
Yes, sir. So,
yes, so almost clauses are discussed. Just that two queries were there. No other relevant query was there.
okay. The same you have said on WhatsApp, right?
Yes, yes.
See, the query is that delivery-based transaction need not to be demat transaction. If an SSE buy on a day and sell on the next day, since T+2 settlement is there, share credit in demat only after this settlement. Whether we need to look demat account. See friends, speculative transaction, this is not the speculative transaction. What speculative transaction says, that when you are dealing on the same day, you are buying on the same day and squaring of the position on the same day, that will be covered under speculative transaction. And other than that, everything will be covered under delivery based transactions. So T+2 is the settlement criteria of the SEBI. You don't have to look T+2 transaction, that is the settlement criteria. You don't have to look for calculation of turnover. So for calculation of turnover, if you are buying today and selling tomorrow, BTST transaction, that will be considered as delivery based transactions only. And another query is, in financial 16-17, the profit is less than 6% or 8%, hence audit should have been done. Yes, friends, in financial 16-17, the audit should have to be done, because in financial 16-17, there is no amendment in the act about the income above the basic exemption limit. So that amendment has come only in the Finance Act 2016. If you have to consider two criteria, that 44 AD subsection 4 should apply and your income should exceed the basic exemption limit. If both the criteria are fulfilled, then you have to mandatorily do audit under 44 AB subclause E. Hope that is clear to everyone.
Yes, Janishji, thank you for addressing all the queries. Just a minute. Just let me check if any further queries there. Almost it's not there. Yes, we don't have any other query. So one query was from Sumit ji and another query was from Punit Sharma from Jaipur and Chergusada.
Okay.
Yes. So, Vidhi ji, you are present there?
Yes, yes.
Yes. So, Vidhi ji, we are done up with the session.
Fanil sir, we would request you to give your inputs on the topics for a few minutes, please.
Yes, sure. Almost whatever inputs I wanted to share, I shared in between itself. So, kind of no further inputs from my side.
Yeah, good afternoon, students. As the sir said that we are Board of Studies Operations is organizing a Teachers' Day on 5th of September. So I request all these students to join from 6 p.m. to 7 p.m. online to see the live webinar from the head office organized by Student Skill Enrichment Board of Studies Operation. Now, I would like to thank everyone who is present online and our Honorable Chairman Shri S. Sushil Kumar Goyalji and our Vice Chairman Sridhar Mupalaji and the keynote speaker Pramod Jainji and C. Vitleji. It is such an honor for me to get the opportunity to thank you all the dignitaries. On the behalf of Student Skill Enrichment Board of Studies Operation, I extend a warm welcome to the present, all the students present online. I may express our sincere thanks to CA Jignesh Rajesh Bhai Parekh ji for giving excellent coverage to the topic tax audit, encouraging with your words and enhancing the knowledge in a lucid way you presented to the students. A special thanks to our board member, CA Fenil Shahji, for providing immense support to make this webinar successful. I must thank the organizing team and the volunteers for working hard for every weekend to make this series of webinars successful day by day. I congratulate all the participants for the active participation. Thanks everyone once again for making it a great success. Stay tuned with us on every Sunday from 10:30 a.m. to 1 p.m. to enhance your skill set on the practical topics for the CA curriculum. Thank you so much.
Thank you.
Thank you.
Thank you.